All right, folks, this is our first of daily reviews for the AM and PM session for the index futures market. Now, this is just so you can go back and look at what you were observing and also how you're journaling. What setup should be highlighted in the morning session and in the afternoon session. If there is a session set up, I'll share it. If there isn't, I'll share that as well. But it's just to train your eye to get you used to doing it and how you should be focusing on journaling each day. Obviously, each time you do this, you would be filling in the empty spaces in your chart with your own personal observations and annotations. Do not just simply copy what I'm doing, because otherwise it's like watching Netflix and it's not the same as learning. All right, so I gave a live session yesterday on YouTube. I mentioned that we would likely see a gap lower opening. We got that here. And before I get into it any further, the question is going to be is how did I know it's going to have a big run lower like this and attack that low? That's the question you're going to be having. And the answer to that is look at this high to that high on the S&P versus this high to that high in the NASDAQ. Over on the right hand side, this is NASDAQ daily chart. On the left hand, it's the E-mini S&P daily chart. This is SMT divergence. So lower high, higher high. If we took out the lows here, then it would be reaching for this, and then if it goes below that, it's going to go for the sell side liquidity. How did I know it was going to gap lower with that opening? Because it's extremely bearish, and there's nothing over here with a gap. It's just the old low, and it's opening up on a new week. So this was a very precipitous drop last week, so it's going to have the likelihood of a gap lower opening, and we got that. The rules I gave you that I'd be looking for concerning that opening gap, if we opened with the gap, which we see here, obviously we did, and we do not take out that low before New York session, then I would look for a run to try to attack that gap and then look for a sell. But we took out that low before New York session, so there was no buy opportunity to do that. It just attacked the sell side liquidity and just kept on going. So there is no trying to attack that gap. If we take out that low, they're going to be wanting to expand it lower. And obviously the same thing could be said for NASDAQ. 5-minute chart, this is the format we're going to be doing. Daily, 5-minute, and right into the chart that has the setup. Right away, you can see another SMT divergence, lower high on the E-mini S&P and higher high on NASDAQ. So there's the SMT there. And this is the old low, okay? And this is the respective old low on the daily chart. That's what that line is. Opening price at 8:30 on NASDAQ. Opening price on 9:30, equities opening. And same thing here, being at 9:30 for equities opening on S&P, and the opening price on S&P at 8:30. Judas swing here, Judas swing here, and off to the races we go. So let's go right into the lower time frame chart. Here is the 1-minute chart. Pause the video. Okay, if you didn't pause the video, you'll be missing the opportunity here. And here is the high that made the SMT divergence here. Higher high in NASDAQ, lower high in S&P. Here is your fair value gap, short-term low being taken. So we have shift in market structure. Inside this is your fair value gap. Your stop would be here. NASDAQ, same thing, short-term low here, market structure, shift internally. Fair value gap right in here, stop would go here. And there's the setup for the morning session here. High, short-term shift in market structure, fair value gap, trades up into it, stop would be here, it never got stopped. Lower prices for the morning session. Market structure shift here, fair value gap, trades up into it, stop would go here, rolls through for the morning session. Hopefully you found this insightful. Until I talk to you next time, be safe.